Hello, I'm Mario Toneguzzi, and I'm taking care of business. Joining me today is Tim McMillan, President and CEO of the Canadian Association of Petroleum Producers. Thanks, Tim, for joining us again today.
Well, thanks for having me.
Interesting report CAP put out today on investment in the oil and gas sector in this country. Let's talk about some aspects of that. The first one, just in a general sense and overall, Tim, 22% increase that you're forecasting in natural gas and oil investment in 2022 to 32.8 billion. Tell me some of the reasons of why we're going to see that increase of investment this year.
Well, we saw a bump up last year over 2020. 2020 was devastating. Balance sheets were seriously damaged across our industry, but many industries. This year, again, is building off of the increase from last year. Prices are healthy for both oil and gas. Global demand is getting back to near record levels and expected to continue to rise. And it's great news for Canada. It's going to help our economy. The one challenge that we do point out is, though it's increasing in Canada, it's increasing at a slower rate than global investments. And Canada is losing pace with some of our competitors from around the world. And I think we need to be very conscious of that, even though it's a good news story for us today.
Okay, well, we'll really turn to that here in a couple of minutes, but I wanted to ask about that $32.8 billion figure. Like, how does that relate in the grand scheme of things historically for what the oil patch was investing in the industry?
So if we go back to 2014, we were attracting about $81 billion.
Wow.
And a little over that, investing that in the economy. Since 2018, we've seen a pullback, partly prices, partly some of the constraints and cancellation of major projects here in Canada, Northern Gateway, Energy East, several LNG facilities. And Canada has started to lose pace with the global investment. And we saw that drop all the way down to, in 2020, just over $20 billion. So last year we bumped up a little. This year we're bumping up again, but we have a long way to go to get back to where we were just 6 or 7 years ago.
Okay, in your forecast, you all broke it down in different sectors. I just wanted to ask you about the oil sands, looking at a 33% increase year over year to $11.6 billion. Pardon the pun, but what's fueling that?
I think several things. That there's a lot of work that needs to be done on our existing oil sands facilities, ongoing maintenance. They're major pieces of infrastructure. I think that there's opportunity to debottleneck and to find efficiencies. There's certainly going to be investments into environmental performance. We have a continuous improvement model. So it's really across the board. There's no major greenfield build-outs, unfortunately, in this. But, at that spending level, it is still going to be substantive for Canada.
Okay, then, super. Coming back to what you had said earlier about, and I want to talk about the market share. Obviously, the investment has something to do with that as well. But I know in your report, you guys focused on a drop in market share. First of all, explain how much that market share has dropped for Canada and why that's important.
Yeah, so if we go back to 2014, which was the last year that we were growing investment share globally, at 81 billion, we were about 10% of global oil and gas investment. Today, global oil and gas investment is just about 525 billion, and we're only getting 6% of it. So if we were to get back the proportional of 10%, we would add another $21 billion of investment into the Canadian economy on top of what we're doing today. So it is material for our economy. And if this oil and investment isn't being produced in Canada, it's being produced in Russia, in the Middle East, in offshore Brazil, in jurisdictions that don't have our high environmental and safety standards. So there's an imperative globally for Canada to play a larger role. We just have to get out of our own way sometimes to do it.
Okay, super. Last thing I wanted to ask you, it's not really pertinent, I guess, to this report, but it kind of is in some ways. Maybe you could explain this, because a lot of people ask me the same thing, is that, well, the oil prices are up again, and what were we at, around $80 or something like that, right? But why haven't we seen the concurrent rise in employment levels in the industry? Can you talk a little bit about that and maybe explain it to people?
So I think there's a few dynamics, but it really comes back to what we were just talking about, that though the price of oil and global demand is rising and demand getting to record levels, global investors have put Canada on the back burner, that they have moved investment out of Canada to these other jurisdictions. We are going to see increased investment with the $33 billion of investment. This is good, and it's going to be across our economy in hotels, restaurants, rig crews, suppliers, manufacturers in Ontario and Quebec, the financial services. It's just far less than what we saw 7 years ago, and that's because Canada isn't pursuing or enabling the investments here. And investors are saying, we're going to take our money to jurisdictions like the Gulf Coast that are growing dramatically, while our East Coast offshore is not growing hardly at all. And that drives jobs.
Okay, super then. Well, thanks, Tim, for joining us today.
Well, thanks very much. Great opportunity.
All right, super. That was Tim McMillan, President and CEO of the Canadian Association of Petroleum Producers. I'm Mario Toneguzzi, and this has been Taking Care of Business. Thanks for joining us today.